So financial services is a key growth engine for Singapore. We've come a long way in the last few decades in the financial services sector. There was a time when we used to play catch up with Hong Kong. Today we are in a place where actually Hong Kong is playing catch up with us in many aspects. So if you look at the financial services sector, you're looking at really three subsectors. The first one is insurance, the second is asset management, and the third is banking. Now, if you look at the insurance sector, we could ask for a lot of things, but if there's just one thing I had to ask for, I would ask for a change to the provisions around carry back of losses. Currently, the legislation allows carry back of losses of up to $100,000 and for a period of 1 year. Now, if you look at insurance companies, the scale of operations is so huge that $100,000 or 1 year really doesn't help. It's okay for trading companies and some small shops to have that sort of allowances, but for insurance companies who are dealing with catastrophes such as the Thai floods and earthquakes and whatnot, you probably need a carry back of losses, perhaps to an unlimited amount and maybe for up to 5 years. Now, if you look at the asset management sector, that's perhaps been the biggest successes of Singapore, and we should continue doing what we have been doing. But if there's one thing I could ask for, it's really having a new framework around funds. So currently, Singapore funds are either set up as unit trusts or companies. There are other forms, but these are the most common ones. If you want to use a tax treaty, then you need to use companies. But the company framework that is applied to these funds is not flexible enough. So what we are suggesting is come up with a new fund framework along the lines of an open-ended investment company structure. Many countries have that, and this includes the UK, Luxembourg. If you have that in place, fund managers will be encouraged to set up more funds in Singapore. Now, moving on to banking. Banking, again, a long list, but if there's one thing we could ask for, is to help the SME sector in Singapore. SMEs find it hard to get loans, it's hard to raise capital. So if we can get banks to lend money to SMEs, it would help the SMEs. In order to encourage banks to have these funds available and be a little more risk-taking in making loans to these SMEs, the suggestion is allow banks to get enhanced deductions for the loans that go bad when they have lent it to the SMEs. Maybe it's a double deduction, maybe it's triple deduction. It's something for the government to consider. Now, if you look at it on an overall basis, we covered the subsectors, but on an overall basis, we have one request as well. The corporate tax rate in Singapore has dropped from 40% to 17% in the last few decades. Our tax incentive rates currently stand at 12%, 10%, 5%, and 0%. Our request is for the government to actually consider reducing the rate under the tax incentive schemes to actually make it more worthwhile for these institutions to comply with the additional commitments and the compliance burden on them. This year we are celebrating 50 years of independence. We are here today because of the policies and decisions made by the government over the last 5 decades. In order to lay the foundation for the next 50 years of prosperity, maybe the government could start today with these small changes to the budget as suggested by us.